All right, all right. Here we go. It's August. It is Jobs Week. That means on Jobs first Friday of every month, it is Jobs Week. And today we have Miss Jackie Bradley here with us. She's going to give us some real estate stuff. I figured you're tired of hearing me drone on, so I figured we'd bring in some fresh faces here. So, with all that said, let's hop into this. I will do the boring part first. Important, but boring. Mortgage rates 6.75, 6.7, 6.7. I know that's old and done, but 6.7. And you can see that that's kind of been where we've been for the last 2.5, 3 weeks. Hopefully, and this is the 10-year Treasury. So, meaning, this shows this about 4.6, 4.65, somewhere in that range. Mortgage rates are typically about 2% higher than this number. So we would like this to go down. The problem is you guys see those squiggly lines. Um, as of right now, it's that 25-day moving average, that brown line. It's kind of propping us up. So that's not a good thing. If we break below that, unfortunately, not a lot of room for improvement because we hit that black line. So I do think these rates are going to stay in this, call it, upper sixes for a minute, unless there's some big reason why they should go down. Maybe like some peace deal actually getting done in the Middle East, but I don't think that's imminent. So we shall see. The Fed, they did meet. They said, hey, everything's staying the same. I suspect, this is Mark Pfeiffer's opinion. I think it's going to be more of the same for the next rest of the year, basically. For the next 5 months, I suspect we're going to be sitting here just saying more of the same, more of the same, more of the same. We shall see. But they do hope and believe mortgage rates will ease. But again, I think a lot of that's going to have to do with just oil and the Middle East. And then in terms of rates, being at that 6.67 we just saw, here's just some stats I just wanted to throw out there. These are the highest we've seen in a year. August of 2025, a year ago, was the last time we saw rates at this level. So, coincidental, it's a year ago, but there we are. One thing that did help us, and just want to bring it up, as I mentioned at the top of this, job weeks, ADP, they come out on Wednesdays. The BLS, the Bureau of Labor and Statistics, that's the job reports that does come out this Friday. But according to ADP, the market was expecting 70,000 jobs and only 44,000 were actually created and made. So the part that you'll see in the bottom left, what I think is really important, 11,000 jobs were lost in leisure and hospitality. Why that's important is an estimated that 180,000 jobs were created because of the World Cup. So when the World Cup came to North America, right, Canada and us, it created 180,000 jobs in these hospitalities and restaurants and all these other things. Well, the fact that we only lost 11,000, not bad, but I suspect there's more to come. And while that I don't like people losing their jobs, the reality is it is a good thing for mortgages when the market gets weak and mortgage rates typically improve. So we shall see. And then lastly, at the upper right, education and healthcare, those have been like the only things for the last few years that have had any real like bright spot for jobs being created. A lot of that's just because the baby boomers are getting older. Healthcare industry is growing. That's not a sign of a good economy. It just is. Education, same thing. We're just there's a need for teachers and things like that in the education system. It's not necessarily the economy booming. So the jobs that are being added, 82% of July's jobs came from education and healthcare. So it's not necessarily a great economy, but the numbers are misleading. And look, I think they're basically what I'm saying is they're probably worse than what's being shown. Miss Jackie, what do we have for real estate nowadays? And I was shocked by this, but tell me about the real estate stats we're looking at here.
So, good news is that there's not a huge change right now in the market. It's looking about the same as it did last summer. Inventory stabilizing a little bit. This is specifically for Dallas. Lots of people still moving to Dallas, so thankfully inventory is still moving. There are two sellers for every one buyer in DFW. So ultimately, still a buyer's market. Things are still moving, which is great. It's only taking two more days than it what that only two more days to sell a home than it did this year. So last year it took 38 days. Now it takes about
Well,
40.
and I think something worth
Um,
mentioning too,
if you
Jackie,
look at the
for
little,
every sorry to interrupt, but for every two sellers for one
yeah,
buyers, guys, you could say, oh, that's a bad thing. Look, it becomes a buyer's market, and that's the reason why we need to encourage our buyers to get out there and do this. And if you look at Texas,
yep,
it's a lot of yellow, so it's good. It could be way worse, but I'll take
yep.
that. I'll take it to where a buyer's market can hopefully get a few more folks off the fence and get some real estate transactions going. Sorry to interrupt.
Yeah, compared to the rest of, I mean, the US, Dallas is kind of staying, prices aren't moving very much, even though it's supposedly a very high buyer's market. So that's looking for for it stabilizing here. This next slide shows where people are moving. So it looks like all across the country, people are moving from to Dallas, which is great for us. And within Dallas, people are only leaving for, other parts of Dallas, Oklahoma, and a little bit to Florida. So just saying people are still coming over here, so don't be scared about selling your house. Just market we
What's
gotta.
amazing to me is it's like Miami. Like
Yeah,
that's Miami and New Orleans. People are going to party and go to retire, I guess. But the
they're not
reality
leaving
is
the
it is,
South, clearly.
yeah, it is interesting. Austin and Houston, right? So
Yep.
Dallas, if people are leaving Dallas, they're not going too far, but you can see where people are from all over the country are coming to Dallas.
Mhm.
I thought you did a really good job on these. These are
Particularly from the coast, which is crazy.
true, crazy.
Coming
What
in.
about this guy?
So Texas, housing is stabilizing. Prices are showing the stabilization. That's what everybody's saying, buyer's market, but we're not changing as much. Look at Austin. Austin had a big drop in prices. Dallas, not so much. So I think that just shows that our market is going to continue moving, and there's no reason to be scared, either on
Like,
the
look at
buyer's side
Fort
or seller
Worth.
side.
Fort Worth is in there. Usually they don't, Fort Worth's kind of like the little brother because it's part of the F in the DFW, right? But we talk Dallas a lot of times, like DFW. Fort Worth doesn't get singled out, but check this one out. May is actually positive as far
Yeah,
as, it's not a price decline, it's a price increase. And I just want to bring this back. We look at this like, oh, decline, decline, decline. Look, we're talking 0.5%. Like
yeah.
that's nothing. So again, people are like, oh, there's a bubble. Man, there's no bubble. If this is the quote weak market where there's two sellers for every buyer, there's no real bubble, guys. I mean, there's still a demand, and people, as we just saw in the previous slide, are still coming to Texas. And so I don't
And
think
we
we have the
haven't,
bubble.
we're not able to see the next 3 months data because they do it in those, quarterly. But most of the time, this market in the summer, people are moving. It's really hot. I mean, there's a lot happening. So showing a little bit of a price decline is not out of the norm for the
Yep.
summer. So new listings, this is about the whole United States. So median list price is falling annually across the US, a little bit more than in the DFW market. 8 straight months of price declines. Monthly payments are down 132%, which was a really great stat to see. It just means that we're going to be able to get more buyers into the market and hopefully help with that affordability problem that we've had the last few years since, COVID. Uh, Pending sales are up. So, it just one is moving down, one moves up. Hopefully that just keeps us in a good market right now until, we see one way or the other it move even more.
Yeah, my biggest takeaway is just look at 25, the black line. 26 is basically just sitting there right on it.
Yep.
A little better than last year, but kind of what we see, beginning of the year, we kind of predicted this year's going to be more of the same. And the red sitting there red on the black just proves that so far it's been more of the same. And unfortunately, I don't see that necessarily improving the second half of the year, but time will tell. And like Jackie said, we got some drag or some lagging data, so time will tell. All right, let's have some fun. Graduates like AI, if you know me well enough, you know that I'm sitting there and I love Claude. I will give ChatGPT credit. They have turned on their game and I've started to use ChatGPT again a little more than normal. But it is amazing, just the AI. And I've had this conversation with somebody else recently that I don't know that AI is going to sit here and have this monster change in our, as far as people are worried about job losses. I don't think that's imminent in the next 2, 3 years, maybe 5 to 10, sure. But what I can tell you is I am becoming so much more efficient. And I know, Jackie, you are too. It just having AI just help us create more productivity from within the team. Nobody's losing their jobs. We're just finding how to do our jobs better. So I think that's the big thing about AI graduates is the fourth bullet on the small teams. I think that's the key where small little guys like us can start playing bigger and having nicer things and nicer toys. And I think that's where it really is a big deal to where whether you're an old pro and already in the business or whether you're a young buck, getting into the workforce, AI is absolutely something that needs to be on the forefront. Miss Jackie, tell me about the consumer. Let's go shopping.
So the consumer, this is all good news. I put this mostly for, small businesses, people that are kind of looking to see what's happening in the market, that it really affects them. Um, Household savings, we're seeing those monthly payments go down for mortgages 132%, or it was $132. That's buffering the increase in spendings. People spend a lot of money in the summers. That's when they go on vacation. Kids are out of school. They want to get out of the house. And so consumer confidence in general is going up, which just means that hopefully things are improving all
Yeah,
over.
when
Oils,
consumers, yeah, when they feel confident,
yeah,
when they're certain they're not going to lose their jobs, that helps home buying.
it
So
does.
that's good.
Oil is up and we all see it when you drive to the gas station, but ultimately maybe we're not looking at such a bleak future like we normally talk about. Everything's too expensive. So low fire labor environment too, which just means that things are on they're in the balance. They're looking up for all of us. This last slide, I found this super interesting. Ireland is attracting American retirees. Um, Lots of one-stop flights to Ireland. I've been to Ireland. It's absolutely beautiful. That photo is Galway in Ireland. I went to Dublin. We were able to go around like the Highlands or whatever. We saw the Cliffs of Moher, but coastal towns are a lot of popular choices. They have great weather. It does rain a lot. So if you don't like the rain, don't go out there. But ultimately, good health care with private insurance and countryside is costing less than Dublin. So most people are moving to the countryside than the city.
There you
Great thing to
go.
look at.
Love it. Can't do mortgages there, but love it.
Correct.
Product of the week. It's more of a highlight of the week, but paying off just high interest debt. The refinances with rates being in the mid to high sixes. Refinance right now, a lot of them are need based or dollar based in the sense that nobody's going to be lowering their rate from 7 to 6.9, but cash out refis, paying off credit card debts, right? Take the mortgage, refinance it and pay off that. I think the average credit card rate I saw was like 22, 24%. So we've been doing a lot of those, and that's just a good reminder that if you have some high interest debt, we can certainly look at that. Jackie, I'm going to let you describe this one because this one got a lot of. This is our meme of the week, and it's us. Normally we feature
Yeah.
other things, but this one was so good. Jackie, tell me, just want to give
Yeah.
you kudos for it.
Yeah, this one was awesome. I was sitting at a coffee shop and saw a photographer out of like Philadelphia or something post something similar to this, and I said, "This is us." And so I pulled this out. It essentially looks like Mark's being arrested for something. That's the Dallas skyline in the background. But he's being arrested for killing every home loan in 2026.
I
We got a
love
lot
it.
of views on this one. A lot of funny text of people being like, "Oh, needed to send this to somebody." And
Oh,
lastly, we have a great Google review from a client. The team puts a lot of hard work into providing
yeah, I was just saying, as
great
much as I'm
customer
killing it, the team's
experiences.
killing it,
Yeah, they
and
are.
we appreciate all these. All right, Dame, Miss Jackie, you are the best. We're gonna have you this be a more regular thing to do
Love.
this. But as Jackie would say, if, I'm taking it. This is my world. I'll promote it because she's helps me with this. Make sure, share, subscribe, like all the normal stuff, right? The call to action that you're supposed to have. Make sure you get all that done. We appreciate you. And as always, Jackie, when you think mortgage,
Thank Mark.
way to go.